It's no secret that as Tesla's stock prices continue to plummet, investor morale is quickly eroding. However, before you lose hope, we may have some encouraging news that has given us hope that the storm is almost over and that share prices will soar in the upcoming weeks. What has been the recent activity of Tesla? What are the opinions of experts regarding the potential decline in stock price? Will there be a quick recovery in share prices? Everything will be made clear in today's video. With a fan base of approximately 1 million, Tesla Incorporated is one of the most well-known and contentious stocks. This is especially true given that the company's stock price has plummeted by more than 25 since early November 2021, falling from $1,236 to $950 on February 3rd, 2022, and then falling even lower subsequently. Tesla has dropped around 3 times as much as the S&P 500 and twice as much as the NASDAQ in the past month, despite the fact that both indexes have declined dramatically. This suggests that investors are quite concerned about Tesla's near-term future pricing. Numerous factors have made us think that after the stock's ongoing decline over the past few weeks, Tesla could blow up next week. This week's closing price of $856.98 indicates that we think an increase in this figure is just around the corner. We'll start with some ground level considerations that have prompted us to assume a rebound is imminent based on a number of positive signs. Recently got a rare look at the Tesla Gigafactory Texas manufacturing lines, thanks to videos that some employees and contractors from Tesla uploaded on Snapchat from within the facility. Things are getting hotter. Tesla revealed late in the previous year that the factory was producing the first Model I vehicles. Additionally, they have stated that by the end of the first quarter, most likely in March, the first brand new Model Is manufactured at the plant will be delivered. For Tesla to continue growing, the start of Model I production at Gigafactory Texas is crucial. It signifies the release of a new iteration of the electric SUV featuring 4,680 battery cells and Tesla's distinctive structural battery pack. Last, although the National Highway Traffic Safety Administration and the Environmental Protection Agency will soon be implementing regulatory certification, Tesla has not yet disclosed how the new architecture would impact the Model E specifications. With its most recent earnings announcement, Tesla had shared a few images from inside the facility, but we had only seen a small sample. We have been fortunate enough to have a rare peek inside the factory thus far, courtesy of a particular staff member who volunteered to give us a tour. In addition, although the necessary government approvals are still pending, Tesla's facility outside of Berlin is prepared to start producing new cars. We don't need to explain you how reliant market movements are on the sentiment and psychology of market players. This is bound to generate excitement. Not to mention the issues surrounding the invasion of Ukraine. We should anticipate an influence on stock market values overall as long as Russia persists in its threats to invade Ukraine, although there doesn't seem to be a serious threat right now. Several news sources claim that troops have been seen getting ready for an invasion. What connection exists? The prospect that Russian President Vladimir Putin may approve an invasion of Ukraine has caused global markets to decline. As Russian officials announced a partial troop withdrawal from Ukraine's border, the stock market surged. And we believe the rise will continue once the crisis has passed. President Biden did, however, issue a warning on Thursday, citing the continued high risk of an invasion in light of growing concerns about the situation's intensification due to escalating shelling between Ukraine and separatists backed by Russia. According to Chris Zaccarelli, the chief investment officer of the financial advisory business Independent Advisor Alliance, markets are wary of Russia's military buildup and don't believe Putin when he says that they are starting to remove soldiers from the area. Short-term stock market losses could result from worries about a potential Russian invasion. However, if past performance is any guide, the most of the geopolitical market impact in the U.S. will most likely be transient. The Center for Financial Research and Analysis, Sam Stovall, acknowledged investors when he said the equity markets are more at danger from the aftermath from the war and inflation than from a prospective invasion of Ukraine. Thus, investors can relax knowing that the news will cause a significant long-term decline in the stock market. James Bullard, president of the Federal Reserve Bank of St. Louis, issued a warning that inflation could get worse if the central bank did not intervene to lower interest rates. He said, "We're at more risk now than we've been in a while, and this may get out of control." During a panel discussion at Columbia University, one possibility would be a massive shock that would cause even more inflation, but we are unable to foresee it At this time, we must take all necessary precautions to avoid a catastrophe like that. According to Fed Chairman Jerome Powell, who told CNBC in an interview that more rate hikes in the near future are necessary to stop domestic price increases, inflation is spreading and rising in the economy. The Federal Reserve's anticipated rate increases have some investors uneasy. We expect the Fed to hike rates, but we see its cumulative response to inflation as more restrained than ever before. BlackRock analysts wrote in a 2022 market preview research, Refinitiv figures indicate that Wall Street census forecasts indicate an approximate 11 increase in overall Say 500 profits in 2022. Since inflation promotes the creation of jobs, it may be advantageous. On the other side, high inflation may reduce business profitability by raising input costs. Investors may find all of this confusing because inflation seems to impact the economy and share values differently. During inflationary times, individual investors need to sift through the noise in order to make well-informed investment selections because there is no one right answer. Certain kinds of stocks typically perform better during times of rising inflation. Investors try to forecast the factors that affect the success of their portfolios and then build opinions around those forecasts. Theoretically, stocks should offer some protection against inflation since following a period of adjustment. Companies' earnings and revenues should rise in line with inflation. This might inspire more people to make investments, which would increase the value of equities overall. Elon Musk, the CEO of the car company, is known for being vocal and unafraid to upset people, which is one of the reasons the brand is contentious. He appears to have a significant impact on investor behavior and market sentiment. Musk stated that SpaceX, his other company, didn't want to disrupt current launch operations in Florida because it was still in the process of researching and developing the rocket. However, SpaceX has started building a Starship launch platform at NASA's Kennedy Space Center. The company's rapid growth in Cameron County has drawn plaudits from locals for generating jobs and drawing tourists, but it has also drawn criticism for uprooting a seaside community and endangering the nature preserves that surround Starbase. Since SpaceX and Tesla frequently work together, news about SpaceX usually has an impact on Tesla stock values as well. This has been demonstrated by history, particularly in 2020 when Tesla's stock skyrocketed and outperformed the market in spite of a dearth of meaningful information. The majority of experts credit SpaceX with successfully launching 2 astronauts, which enhanced Elon Musk's credibility. Additionally, as a component of a bipartisan infrastructure plan that calls for allocating $5 billion to build a massive nationwide network of electric vehicle charging stations. The Biden administration unveiled a proposal to provide states with $5 billion spread over 5 years to subsidize electric vehicle chargers. This program is the cornerstone of the administration's broader strategy to combat human-caused climate change and expedite the switch to renewable energy sources. The Biden administration promised that by 2030, 50 of all cars sold in the country will be electric or plug-in hybrids, promoting electric vehicles as being more cost-effective for Americans than gas-powered cars. Being the top electric car brand, Tesla will benefit from this in terms of sales, which will probably cause the value to increase even more and imply a positive outlook for the stock market. Despite not mentioning the brand in favor of mentioning competitors, Biden acknowledged Tesla as the industry leader when a petition was signed in support of the cause. Analysts and experts appear to be anticipating a recovery as well and are advising investors to purchase the decline. Even though Tesla had warned that supply chain issues may force a production halt, Deutsche Bank and Morgan Stanley recently voiced optimism about the company. For the upcoming year, Deutsche gave a $1,200 forecast for the company's price, while Morgan Stanley set a $1,300 target. Credit Suisse's Dan Levy acknowledged that growth stocks have been declining since the start of the year, saying that Tesla has suffered disproportionately. Nevertheless, he made the case that the stock will eventually recover from its present decline. There is a lot of promise for Tesla's future, but it is difficult to predict. On the other hand, we concur with the bullish indications that a resurgence is imminent. Do you believe that next week we'll see a further decrease in Tesla's stock prices, or will they rise? Please leave a comment below